this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 31st, 2020. As always, please hit the like button, subscribe to this channel, and share this video with others. So we had a worst GDP report in history of the United States. Actually, the same thing happened in Europe, in Germany, for example. Yet the stocks pushed towards new record highs. So we will look at the same kind of weird response to the really major events such as bombing of Hiroshima and Nagasaki in 1945. Dow Jones did the same thing. It pushed towards new records. We'll try to figure out why, or if we should even bother figuring out why. Technology ETF XLK is making new records, and it's being driven by strength in semiconductors and Apple. Apple is at new records. Highlight the trade, United Parcel Service, UPS, up more than 30%. Congratulations to subscribers. Junk debt is actually not showing any signs of bearishness, and it's pushing towards new records. So I would not look for any tapping patterns just yet. Treasuries continue to benefit as Fed keeps buying them. We'll look at natural gas. It's approaching resistance. So dollar is big, big story. It collapsed to 52-week lows. We caught this enormous move for euro versus US dollar, 710 pips trade. So if you caught it, congratulations. Look at Bitcoin. As it breaking out, it could easily go to 1600, and Ethereum also 60% gain since recent alert. Okay, so S&P 500. Here's S&P 500 rather futures on daily time frame. So as usual, I'm going to be using my proprietary trading indicators. On this chart, they are this green, blue, red, yellow line. You can find out more about them at MasterChartsTrading.com. Basically, this is all I use in my trading. This is just, in my opinion, great way to trade. Very simple. I practice meditation and Zen Buddhism, and I tell you, it's just basically Zen of trading. You don't really need to know anything. You just need to follow the lines. So if you need to have more information, go to MasterChartsTrading.com, click on Buy Alerts and Indicators, and sign up for Trading Indicators or Ultimate Package. I have a newsletter as well, and we now have a new product called Stock Screener, so sign up for that. So yesterday, Thursday, we had the worst gross domestic product report ever. I think GDP of United States lost 9% in a quarter, so that's annualized to almost 33% of the economy. So just horrendous. Any other time, if we didn't have this virus going on, this would be the literally a sky is falling event. Yet, if you look at the chart on Thursday here, on the 30th of July, nothing happened. It barely registered. And today, actually, we gained a little bit. So you can see that the relationship between various economic indicators and the behavior of the stock market is extremely difficult to connect those two together. So I stopped doing that connection, and I just look at the chart. I no longer look at any of the various reports that are coming out. Yes, they may be terrible, or yes, they may be wonderful, but we have no clue how the market will react. So I gave up on that, and I simply look at the chart. And the chart has been telling me since 29th of April of this year to just keep buying it. So we had actually two opportunities, well, three if you count this one on 15th of June, to get in on the long side, to start, to keep buying it. And yeah, that's what we can just keep doing. We keep keep buying the stocks basically. This little pullback, well, really didn't really matter because I'm looking always for a deeper pullback. So if stocks continued lower to like 2938, that would be just a perfect level to buy it, but I'm not sure it's gonna get that low. So we're just not questioning this market. We just keep buying it. Here's a historical chart, Dow Jones Industrial Average. This is 1945, August 1945. The bombardment, the United States dropped bombs on Hiroshima on August 6th and Nagasaki a couple of days later. And notice that, it's a terrible event. Once again, it reflected positively in the market. So go figure. Of course, you can say that the reason this is because the war was quicker, came to an end quicker. But still, if you think about it, and can you imagine a nuclear device going off somewhere in the world right now, and how would the market react to that? So this is what I'm trying to explain, is the world events, economic events is one thing, but the reaction to the stock market, or the reaction of the stock market, is a completely different thing. So I basically avoid trying to guess what the market will do, and just look at what this market is doing. And what the market is doing, the market is going higher. We are extremely close to record highs for S&P 500. So S&P 500 record highs are about 3,300, 3,400 here. If we break out above that, I think we can easily go to 37, maybe even 4,000. So yeah, basically try to avoid overthinking. Yes, lots of bad events, lots of scary events out there. There's riots, there is lawlessness, basically on multiple levels, lawlessness. And now that we're going to see potentially evictions, in the United States, because there is really no way for the people who lost their jobs to pay the rent. So they will either need to somehow find a job or do something else. But the way things are structured right this instant, we could see just enormous homeless encampments. Here in Bay Area, San Francisco Bay Area, homeless camps have become kind of like a fixture. And so we kind of just look at the homeless as a normal occurrence. But if we're going to see millions of people displaced, it's a scary proposition, and I'm hoping they'll find some kind of a way forward here. Nasdaq Qqq. So the record highs were set on 13th of July, and again, this is right there on the 30th of July, on the Thursday, when the report came out, the worst GDP drop in the history. The stock market, or the Nasdaq, actually gained about a quarter, about half a percent point, and today it also gained. So yeah, don't trade on the news. Under no circumstances should you be trading based on the news. You should be trading based on the chart. This chart, the best opportunities are, I think, around the blue line. So 14th of April was the latest opportunity. As I just mentioned, we have a rudimentary scanner. So the stock screener, what it does is it will screen through various stocks on Nasdaq, on New York Stock Exchange, etc., and look for such setups, for example, as a close above the blue line. So yeah, do consider signing up, even if you don't really have the indicators. Ideally, you should have your own indicators, and you can have them on your chart. If you have a TradingView account, TradingView accounts are free, so just sign up on my site, MasterChartsTrading, and I'll open the door for you on TradingView. It's really easy. So XLK technology, most likely driven by strength in Apple. This is a new record high, all-time record high again today. So despite all of this news, despite all of this occurrences and just a tremendous amount of suffering, and I think we're not even a quarter of the way into this pandemic. I think we could see at least a year or more of what we're having right this instant before widespread effective vaccination is achieved. And then even then we don't really know if the vaccine will be effective. So lots of ifs, lots of uncertainties. Yet again, stock market is at all-time record highs. So don't question it. What we do is we just buy. And here's the opportunity. 29th of April, good for over 19 or close to 20% actual gain. And within the technology sector, semiconductors also are looking great, and also despite the collapse of Intel. So if you're buying diversified semiconductors or even less diversified SMH, I prefer XSD personally, but it's up to you. Again, alert was sent here on the 6th of May and another one on 27th of April. It's not magic. It's not, I'm not making this up. This is actual opportunity right there. 6th of May. The indicators are calculated. I'm not drawing them in. It's an actual price action indicator. So 25% gain, just since May. And like I keep saying, just ignore everything and just trade. Some people, or rather vast majority of people, cannot grasp this concept. So if you're listening to this, try to grasp this concept that events do have some sort of an influence on the behavior of the price, but it's better to avoid overthinking. If you're trying to introduce the various events into your analysis, then you may get paralyzed and not be able to trade at all. If I was back here in May, I was thinking, something about markets and the way the semiconductors will no longer be needed because people don't have money, and who will buy the computers, who will buy the equipment, then I would be paralyzed here and I would not be making this decision. But even if I show this to my son and he goes, okay, well, there is the close above the blue line right there, so that's all we need, right? Very easy. Here's Apple. So once again, all-time record highs. I heard they're going to do a 4-to-1 split, so it's going to be around $100 each. Now, me personally, I don't like buying up here. You can see that the latest opportunity for us was back on 22nd of April, and that resulted in 55% gain. So we tried to look for a pullback. First we say, okay, yes, the stock is definitely in an uptrend, and then we're looking for a pullback within that uptrend. So this is what we did. Here on 22nd of April is what we had. What I just said, we had, there was a breakout, or in this case, it's kind of like a pullback trade, because the stock was already in an uptrend. So yeah, don't try to think too much about this. Just trade the chart in front of you, basically. Another recent trade, UPS. So just a picture perfect trade. Two alerts, one on 23rd of June. Actually, could have probably even entered on the 8th of June here, and another opportunity and another alert on the 30th of June. Notice how it gapped up on the 1st of July here. So at this point, our target was reached, and so initially when we just buy here, we put our stop at the yellow line. But once our target is reached, we advance our stop immediately to the either the entry or to the blue line. If you took some profits here, then it's okay to advance the stop to like maybe just below the blue line, because you want to give the price a little bit more room to fluctuate. In this case, really was no need for that, so the stock just broke out and never looked back, and then just popped higher on the news of GDP collapsing. So yeah, on the 30th of July here, so you can see UPS just skyrocketed to new all-time record highs. So once again, don't overthink it. Just look at the chart and see if it fits your criteria, and then just buy it in this case. All right, so from a macroeconomic and more from an intermarket perspective, so here's the junk bonds. Junk bonds, as I keep saying, they are important to the stock market because junk bonds and stocks they correlate highly. They move together in lockstep. So 3 opportunities here. One on 9th of April, another one was on 22nd of May, and another one on 30th of June. I actually opened myself here on 22nd of May. I bought here and I bought here into my retirement portfolio, so I'm just keeping it still. And notice what's happening right now. We're seeing a breakout above the green line, so this is strong. This is presence of strength. This is presence of buyers. Buyers want to be buying this security. Additionally, Federal Reserve is outright buying this particular ETF. So we have multiple reasons to be buying it, very little reasons to sell it, to short it. I think the price action on junk bonds is showing that we could easily break to new records for the stocks as well. Treasuries TLT, so I actually have a position I bought here on 11th of June at 162, 87, about 163 here. My target was reached on the 10th of July. I advanced my stop to entry. I took some profits as well, and I'm still trailing it higher. I'm trailing it at the blue line itself. Let's see if it breaks to new records. Then could easily. I mean, this is a record right there on the 9th of March, but we can break out even higher. Treasuries have room to run to the upside, especially because the Federal Reserve is also buying them. All right, let's switch gears. Natural gas. So natural gas is in a downtrend. Last time I shorted it here on the 6th of May successfully. It's again approaching this area where I would be interested in shorting. So this is a 20+ year low on the 25th of June, and now a rebound. So a rebound, if it gets to the red line, I want to see some sort of a pattern here, maybe a high above the red line, a close below the red line, or even a close above the red line, then a close below the red line. So that's my trigger. So long as there is a high made above the red line and a close below it, we're fine. We can short there, or we can also buy puts on UNG. Now, at retail level, it's not a great way to trade it, but unless you have futures, or if you have, this is a CFD, contract for difference, so you can trade it, not in the United States, but it follows the natural gas very well, the price very well. So watch out for a bounce towards about $2, and let's look for a top-end pattern here. And then we can try and short it here. Dollar collapsed to 52-week lows, big drop. So I showed this already. One opportunity on the 2nd of June, another beautiful opportunity on the 30th of June. Nice, just huge move immediately in our favor. Within the dollar index, I mean, this is not really tradable in the United States. But within the United States, we can trade Forex. So here's Euro versus US dollar. And this is an alert from 19th of June. I mean, this is a a home run trade, 710 pips. Congratulations if you opened again. I mean, very nice move. It's overdone. This looks like a tapping candle right there today on the 31st of July. Looks like a shooting star candlestick. You know, but then again, it's also possible we'll just make a new high and surprise everybody. So right now, Euro versus US dollar is an uptrend. So what I would like to see is a pullback, a relatively deep one towards the blue line, currently at 1.143. Something similar to what we had here before, bottoming pattern around the blue line, and then a move higher. Right now it's definitely overextended to the upside, so I'm expecting a move lower of some sort. I don't know how much that move will, how big of a move it will be, but if you opened back here in June, congratulations. I mean, this is a sweet move. And finally, Bitcoin. Now, I bought personally Bitcoin back in May at 8,800, but unfortunately I got stopped out. And now I'm like, look at this. It's breaking two new records, or rather two new highs. It's now at 11,000, and unfortunately I got stopped out, but above cost. So another lesson for traders is that usually it's better to hold for longer periods of time. Whatever securities you're trading, usually it's better to hold longer. The longer you hold, the better the results normally. And also the bigger the time frame, so for example, daily versus hourly charts, the results are much better on the daily charts versus the hourly charts. So here, the breakout occurred on 29th of April for Bitcoin, where I'm hovering. And from here on, I said, okay, that's it, no more bear market. And we had big bear markets here. You can see several setups, or rather several actual alerts to short Bitcoin. We were shorting Bitcoin, and one of the trades resulted in 56% gain. So, but then in April here, you can see the price the trigger was there to short, but there was no follow through. So this was already kind of like a clue for me that Bitcoin may be turning around, and then lo and behold, a few days later, on 29th of April, Bitcoin did turn around. Another opportunity to enter right there on 11th of May. Why? Because we touched the blue line, made a low below the blue line, and then closed above it. So that's my trigger. Unfortunately, I got stopped out, and look how long it took. It took from May till end of July to finally break out. So yeah, sometimes it's better to hold longer, so do hold longer if you can. Here's another just a solid trade, Ethereum versus US dollar, ETH USD, 3 alerts back in May. Notice where the arrows are, and now 60% gain. So congratulations again to the subscribers at MasterCharts Trading. And if you're ready to sign up, head over to MasterChartsTrading.com, click on Buy Alerts and Indicators, and sign up. So the indicators are this green, blue, red, and yellow line. You can have them on your chart. You need a TradingView account, free. TradingView account is free. If you sign up, once you sign up on my side, then I will open the door for you. Trading indicators for TradingView are $29.95 per month. There's also Ultimate Package deal, which includes my newsletter and the indicators. And I'm maybe offering a little bit more, a little bit different here in the future, but for now everything is still the same. So you get lots of different alerts about various securities, stocks, bonds, gold, forex, cryptos, commodities, lots of ETFs, lots of foreign ETFs. So I trade pretty much everything. So for the price, you're getting a killer deal. at $24.95, or if you get a full package at $49.95. So again, stock screener, still in the beta testing phase, but you can actually screen stocks for you know, things like this. Oh, excuse me. For various opportunities. Like for example, I usually look for a close above my blue line, and then we just buy it there. So, you know, a screener would send you alerts about which stocks are closing above the blue line, and then you can make a decision: do you really, you know, want to get into it or not? So it's still a little bit in the works, but the rudimentary screener is there already. So that's that. All right, so that's it for this week's recap. Again, if you have any questions, please ask me. Thanks for watching. Have another great trading week. Bye-bye.